Your portfolio matters. We understand that right now. So we're bringing in Kevin Miller, eValuator's Chief Investment Officer. And he wouldn't get out of the chair, so we said, let's bring Peter Schiff back. He is here once again for this massive. It's a 2.25% market sell-off. But in the aggregate, we are looking at this very moment at multiple days, Kevin, of significant losses. What, as an investor, should people be doing right now?
Well, obviously, the first thing you have to acknowledge is how long is your time horizon until you're going to need your money. And if you are going to be spending money within the next 2 to 3 months, obviously you shouldn't have been in the stock market with that money in the first place. I think now you just have to ride this out. We have things coming up that have a definitive timeline that could abruptly change the direction of this market and change it significantly, which would be the Fed, what they're going to do this week, and then in the upcoming first half of next year, then obviously the China trade agreement.
Peter, does the Fed blink in light of everything that's happening today? And we are off the lows of the session, but...
Yeah, look, Liz, I think regardless of what the Fed does on Wednesday,
well, does it
I think
blink?
the
Answer
next
my question
move
first.
after that is go. Yeah, I am. Regardless of what they do, the next thing they're going to do is cut rates. They're going back down to zero, but it's not going to stop the bear market, and it's not going to stop the recession. It will probably kickstart inflation into a higher gear. But, you know, Charlie, before I came on, Charlie was saying there's a lot of fear out there. There's not. There's an absence of fear. There's a lot of complacency out there. People should be afraid, more so about what's going to happen to the economy. There is going to be another financial crisis. The next recession is going to be much worse than the last one. That is the problem. You know, whether or not the Fed is going to let the cat out of the bag tomorrow, whether they're going to take a punt and not raise interest rates, but regardless of what they do, this is the last rate hike. And the mistake that the Fed made, though, was not raising rates. The mistake was cutting them in the first place. They never should have went to zero. They never should have left them there that long. The minute they did that, they doomed the economy.
Kevin,
and now we're going to have to reap the whirlwind of what they sowed.
Kevin, we've got 30 seconds left. Can you tell me what you advise your clients to buy in this atmosphere where there are some definitive moments, as you put it, coming up on the calendar?
Well, I'd tell them to definitely stay out of indexing and go with something on more active basis. I do believe that I disagree with Peter. I don't believe we're going to go into a recession in the near term. I believe that we're going to be fine with regard to where this market can recover. It is painful, but I do think that the long term is positive for us.
I'm Jeff Bishop. I'm the co-founder of RagingBull.com. I'm one of the world's top real money stock option traders. Now today I want to share with you.
The financial market's taking another big tumble today. Don't look at your 401k or your TD Ameritrade account. And the recent downturn is sparking fears of an impending recession. Not the R word. The Dow closing down 507 points, the S&P falling 54, the Nasdaq dropping 156 points, and a New York Times survey shows almost half of all the 134 CEOs they polled believe a recession could hit by the end of the month, with 2/3 of those polled citing political instability and trade negotiations as the major reasons. So should we all be getting a little nervous? Joining me now, he is Euro Pacific Capital CEO. It is Peter Schiff. Welcome back to the show, Peter Schiff. Nice to see you.
Well, nice to be here again.
So what is driving the markets downward in your estimation?
Well, selling, but I think most of the people who are selling are still oblivious to the fact that this is a bear market. Most people think it's still a correction, but it's just early in a bear market. I think this bear market's going to be particularly vicious. But the more important thing is the recession that's coming. And this is not just going to be a garden variety run-of-the-mill recession. We are going to finish the recession that we started in 2007 and that was interrupted for 10 years with quantitative easing and 0% interest rates. But the back half of this recession is going to be much worse than the front half.
Now, I want to stop you for a little bit, because you have written extensively about the Fed and monetary policy exacerbating and creating a number of bubbles. Are we seeing that manifest, and if so, how?
Well, sure. I mean, Trump inherited a bubble that was passed down from Obama, but it was the Fed that blew all the air into it. And unfortunately, the bubble's going to pop on Trump's first term, which means he's not going to have a second term. We're still going to be in this recession on Election Day 2020. And the problem is not that the Fed is raising rates. I mean, the problem was that they slashed them to zero in the first place and that they left them there so long. Yes, and so at this point, and it didn't matter, when they raised them or how rapidly. That was it. I mean, they sealed our fate the minute they checked us into this monetary roach motel. I said from the beginning it was impossible to check out, and the Fed's about to find that out the hard way. Unfortunately for the country, the consequences are going to be far more dire than just having to go through a horrific recession.
All right,
because politically,
so let's say you say with certainty we're heading into a recession. What can we do? What about ending the Fed? Is that a place to start, and is that a realistic solution?
Well, I mean, it would be nice to eventually end it, but it's not going to happen anytime soon. I do think that we're going to go through a horrific period of stagflation. This next recession is going to be accompanied by, yes, very, very high inflation. But the problem is that the Democrats are going to nominate a socialist, and that socialist is going to be elected president in 2020, and he or she will have a socialist Congress in 2021, and all of the blame for this collapse is going to be laid at the feet of Trump Republicans and what Trump and Republicans supposedly stand for, which is lower taxes, fewer regulations, freer markets. So unfortunately, now that Trump has rebranded this bubble as his, and the Republicans have claimed it for their own, unfortunately, they get all the blame. And this is the big danger, because we are going to go hard left in 2021. So investors had better buckle up now.
I think you might be slightly more alarmist than the normative consensus, but I will tell you, you do speak some truth here. It's very important, and I think people should just start growing victory gardens of their own weed in order to numb themselves from the coming pain. Thank you so much, Peter.